One single strike of manipulation was spotted today, and it curiously led price action to a recovery into the tail end of the session. The immediate upside also appeared to have something to do with the weakness over the broader markets, since the asset has the ability to decouple from the indices. Let's pop open the charts for a true edge. Welcome back to the channel on this Thunder Thursday. This is ARCa, and let's dive into ticker symbol FNGR. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol FNGR. And what we're observing here is the manipulation chart here in the 3-minute time frame, where we actually noticed one single strike of manipulation right down there, where actually price action found its bottom at $3.93 before finding a recovery here. So if we have a recovery, could this be enough to shift momentum towards the upside? Well, let's go ahead and find out, because there has historically been some inverse correlation to the broader markets with FNGR, right? So I guess we can go ahead and pop open I don't want to do the correlation coefficient, but what I can do is actually introduce here the pairing of the SPY versus FNGR in the same asset, right? So let's put this in a new price scale. So yeah, this over here, right? So let me just make this into a candle formation so that we can understand exactly what's happening, right? So yeah, this is the SPY right up here, and of course we have FNGR right down here, right? So yeah, into the end of day. Let's see what we're looking at here. Yes, some inverse correlation here, right? We're getting this little oval here, right? Downside on the SPY. Downside on the FNGR, upside on the SPY, and I mean, not always was it actually behaving like that, right? But yeah, it looks like it was on and off, to be very honest with you. Yeah, I guess some, right? Okay, so yeah, other than this, I just wanted to, kind of check it, right? But overall, you can clearly see that there is some inverse behavior here, right? So, and yeah, we've already noticed this before. There is this anomaly here, and we kind of do our best around it, right? But let's go ahead and now move on to the next chart and see what we have, right? So let's go ahead and pop open this now. So hourly chart, linear regression band is actually displaying to us that price action ended up closing beneath the linear regression band, right? So this in the early part of the session coming to tomorrow for Friday, there is I mean, remember that this is around 70% accurate, right? So from this point, there could be a continuation here to the downside because of the simple fact that we closed beneath this the linear regression channel, right? So that usually is closing beneath the zone here, that it's indicative of kind of facing some downside here. So immediately we know that we have an hourly time frame gap. So we have a support area at 404, and I can just go ahead and kind of jot them down here for us, right? So 404 to about I mean, honestly, it has two areas. It could be 406. Yeah, so I'd say about 404 to 406. And here we go. And then if we do face a continuation to the downside here, then of course we have one more zone to observe, right? So that's going to be the bottom side of the gap, the official closure of the gap, right? And then the linear regression bottom, which would be on the following candle here, right? Supposedly. So we can just assume that could be it at $4. Right, so let's just go ahead and kind of note that down. So 401 to $4 could be the second area of support for us to observe, and then we would pretty much bounce here, because there is some nice momentum introducing here, and price action here, just so you can see what happened in the daily time frame. This is not reflective of the it's not reflecting the after hours, which ended up closing at looks like 410, and the traditional hours closed at 401. So nice little pump to the upside there. And yeah, this is the point of inflection that we've been speaking of quite often here, right? 385 to 396. We came right back down today, tested that, and bounced to the upside, ending the day at 410. So that's okay too. All right, but still remember that if we do make an upside here and start just recovering, that we still have a very strong area of resistance into that area of around 438 to around 444. But it's not new to us. We've already seen this. So I want to express a little bit of danger here in the markets, right? And that would be due to the fact that we actually have in 19 hours, 20 seconds, and counting. Weekly bearish engulfing is printing here. I will say that it's not in the ideal uh, state, though, right? So the best way or the most effective way to get a bearish engulfing to actually work would be actually during an upside, just like this. So we got the upside in the price action, and you have the red candle here engulfing the prior green one. That indicates a downside in the reversal. Same situation here, right? So we have an upside in price action. We built that bearish engulfing, and then price action continued to that downside. So in this case, we're building a bearish engulfing during a downside. So that's not the best type of bearish engulfing that there is, right? Or it's just not as credible. So that, I mean, well, it's still probable, right? It could still realize. It's the probabilities of it realizing actually drop based on that simple fact. So team, please go ahead and remember that the seats are actually taken. They're definitely going right. We actually have I actually just had a surge of attention into the ARC Masters trading course, the 16-week mentorship that I reintroduced after track 3 got filled with. I mean, I opened 30 seats for track 3. We ended up putting 35, 36 people in there. So now there's still more people asking for the track 4, and this is going to be the last one I ever do, team. I need to get into trading. I really, really, really cannot do this. I was supposed to stop on track number 2, so now track number 3 filled up, and I'm going to have to do the same thing that I did. Track 1 and track 2. We're going to do track 3 and track 4 to begin in January. Okay, team. So just know for a fact that those seats are going away little by little, and today, especially today. Right, so please make sure to get in touch with me here. I'll pass you the disclaimer and the syllabus for your review. Okay, team. So let's go ahead and now move on to the next chart here. 5-day time frame is actually, I have this up here because I wanted to see the Gaussian channel. Right, so not on the 5-day time frame in particular. I just needed something to kind of observe here. So 3-day time frame, yeah, it's we just started a new iteration here, and we're already testing that Gaussian mid-band, right? So if we start to close this 3-day candle beneath the area of about $4, that is not good, right? That is definitely not good. That's going to suggest a continuation to the upside, and it could be a pretty aggressive one at that, right? That could introduce some new lows here. Somewhere around the area of around 304 to maybe 289. So let's not even talk about that. We don't want that to happen here. But very, very clear indication here, just to reiterate from before, right? We have this declining volume here with the declining price. So that usually indicates that there is some weakness to the bears, right? So the last part of the analysis here is also a bit dangerous, since we have a 5-day closure, a second one, that is actually beneath the SMA 200, and that's not the best, right? Definitely not the best. And if we continue to the downside here, then the implications would be SMA 50 on a 5-day time frame, 365. I don't see that happening just yet, but if it does happen, I'll try to be as prompt as possible in announcing that, right? So 30-minute time frame, immediate short term here for the RSI. Definitely a convincing upside here. Same situation with the bi-hourly time frame. We actually are entering that bullish control zone and gravitational zone for a push to the upside. So very likely for it to happen there on the bi-hourly. So that's looking okay. Now the 4-hour time frame is making a bullish crossover the SMA 14. So that's also looking really good if we can actually make this kind of right up here to the gravitational zone, then there would be a continuation to the upside, but that's not going to be given to us until the actual shorter time frames, like the 30-minute and bi-hourly, really thrust to the upside here to start pressuring the 4-hour time frame with that same pressure, right? So now the 8-hour time frame, arguably in a pretty dangerous zone, but it is outside of the gravitation here technically, and it's also creating a bullish crossover upside of that SMA 14. So that's good. The 12-hour time frame, however, is showing a resistance, and it's in the gravitational zone for a pullback. And leading into the actually, let me see the daily. Yeah, daily is already showing downside. Buy daily is in the gravitational zone for a continuation to the downside. Okay, so if we're gonna have a resistance from the initial upside that we're getting from the shorter time frames, then yeah, I would actually have to put down here that 421 to 418 could be the resistance range that we face tomorrow. Okay, so yeah, just be aware that I am kind of looking for a very short term recovery here before we continue to either consolidate or validate this ultimate bottom side here, right, team? So yeah, that's pretty much it for this video. Please remember to reserve your seats before it's too late. Let's get a fresh start for January and get the trading moving, right, team? So yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night, and I will catch you at the bell mañana. Adios, team.